Hi, everyone. Welcome to the 117th episode of the Timing Research Show for December 19th, 2016. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing the 169th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any of the past reports there. I have Dave Landry back to host, so I'm going to go ahead and turn it over to him.
Oh, fantastic. Thank you, David Kosmeter, and thank you to Timing Research for having me back once again this week. We've got a full lineup this week. So let's start with you, Barry. Tell us a little bit about yourself, and tell us a little bit about TopDogTrading.com.
All right, Dave, thank you very much, and thanks for having me here today. So, yeah, TopDogTrading.com is my company that helps people with learning how to read charts. Technical analysis is what we focus on, and we do it for day trading, swing trading, and also for pretty much any market you can chart. Stocks, forex, futures, commodities. I trade all that stuff. I've been trading for, well, gosh, next month will be my 50th anniversary of trading. Can you believe that?
Wow.
Crazy. I know. And I look so young. Look at my picture. I look like a teenager. A teenager plus like 50. Yeah. Yeah. But anyways, like who said it? It's my 50th anniversary of my 18th birthday or something like that. Yeah. But so yeah, my dad was a stock trader and he got me started when I was 8 years old. So yeah, I've been trading, well, not really trading, but learning about trading since I was 8. And actually trading too, because my dad would teach me stuff, and then he'd pull out 5 stocks, and he would actually choose one, or I would choose one, and then he would trade it. And that was a lot of responsibility, have my dad's money on the line, but I'm sure he probably vetted all the 5 candidates that he gave me before he before he even presented them to me. But so yeah, we teach people how to do chart reading, technical analysis for various time frames, various markets. And I would say our specialty comes down to 2 things, really helping people learn how to time their entries with great precision, and then the other thing is teach people how to know whether the move is strong or weak. In other words, momentum, because a lot of people trade trends, and that's great. I do too. But I always tell people, before you trade a trend, you have to ask yourself this question every single time. Is this a strong trend or a weak trend? Because people find themselves getting stepped out all the time. Usually are trading weak trends, but they've never learned the difference. And so I teach them that so that can really help them to enter at a timely spot and also in a strong moving market. So that's it. I'll stop there. We'll have plenty of time to talk in the future.
Okay.
Here.
Yeah. Good stuff. All right, Kurt, let's go to you next. Kurt Capra from T3Live.com. Tell us a little bit about yourself and tell us a little bit about your trading and what's going on over at T3Live.com.
Hey, it's good to be back. Thanks for having me. My focus, honestly, here at T3 Live, we have something for anyone, whether it be equities, options, longer term, shorter term. My focus, however, is more in the Forex area. That said, my method, my approach is extremely versatile in that what I will talk about today, and even in discussions we have based on the questions, based on the report, can be applied to no matter what it is you're trading and on no matter what time frame you're trading from. So it's extremely, like I said, versatile in that sense, where you don't have to learn different strategies or different approaches given different time frames. So, again, like I said, we do a lot here. We've got guys like Scott Redler, who's been on CNBC, Fox News, on a virtual trading floor, all the way up to longer term options type holding. So that's a little bit about what we do here.
Okay, cool. All right, let's go over to Lance next. Lance, Ippolito. How am I doing on that, Lance? I should know that.
Ippolito.
And I actually studied some Italian, so I don't think we met in person, but I met some of the characters from AlphaSharkTrading.com, and we got into a little trouble in Vegas. But
I imagine.
There, right? Anyway, Lance, for those of us who don't know you, tell us a little bit about yourself, your trading, and AlphaSharkTrading.com.
So I ran a commodities fund here in Florida for a couple years and mostly trade the futures, the NASDAQ, S&P, 30-year bonds, gold, and the yen. At AlphaShark, we're mostly known for our, and I actually trade options too now, as sometimes in the futures market it can get a little choppy. Something exciting that we just launched here at AlphaShark that myself and another moderator opened up is we do have a exclusive futures room now, to where early in the morning, when the futures tend to move, we have an exclusive room open for futures trading, and of course the normal options room to look at institutional order flow. So it's been innovative. Hopefully the markets can get some action going recently. But it's fun, and mostly my bread and butter is the S&P and the NASDAQ futures. But I will trade gold, the yen, and bonds when they're moving too.
All right, Glenn, let's go to you next. Glenn Thompson, friend of the show, PacificTradingAcademy.com. Tell us a little bit about your trading, and tell us a little bit about PacificTradingAcademy.com.
Pleasure, and interestingly, I'm happy. Well, I'm a little surprised. I thought I was the elder statesman, but I think it was Barry, the first person who said he's been trading or in the business 50 years. I haven't. I assumed I had been had seniority in terms of longevity, but I've been doing it. I've been in the industry about a little more than 30 years, and I kind of got into it by accident. I had planned or was gearing up for a completely different career and kind of shifted gears when I got out of college. But in any case, at Pacific Trading Academy, we are an educational institute. We teach all manner of analysis that is congruent with trading and the markets. I personally, and we have right now about 4 mentors, but and each one has their interest and focus. But I personally, I guess about 3 years into my career, kind of shifted from the fundamental to the technical side. And have kind of focused on that primarily as far as my own trading and in teaching. So I'm a technician primarily. And that's primarily what I focus on: technical analysis, chart interpretation, with a subset of specialty, I guess, in market timing. So that's what I teach on, and it scales. Markets are fractal, so I teach it for short-term intraday as well as swing trading, position trading to the longer term. And that's kind of what my focus is. So it's kind of similar to, I think, what Barry was saying. In terms of my personal activity, I focus, I started in futures. Actually, I started in stocks, but most of my activity is in the ES, trading short-term E-mini, and do a lot of Forex trading as well. We've been trying to set this up. It's not currently present at Pacific Trading, but the management has been asking me to run a Forex room. So it's just the logistics of getting that together. We've got currently another one of my, a co-worker of mine that does a E-mini trading room, but so since we have that, we'd like to complement that with some Forex, and I do that as well. I earn most of my income from the E-mini and the Forex. So that's pretty much what I do. I could go on and on, but yeah, that's an overview of what we do.
All right, cool. My name is DaveLandry.com. DaveLandry.com. My name is Dave Landry. My website is DaveLandry.com. I think when it comes to markets, or I know when it comes to markets, you can only predict so far out, but you can follow trends forever. So I'm slotted as a swing trader, but we'll stick with positions for a long, long time. And we have some positions, one in particular that we put on way back in February. So, and we're still in it. And that's, hopefully we're in it this time next year if David Kosminder is kind enough to have me back. I have a 21-page report. You can get that on my website if you go to the store. And also, I'd forgotten, but there's a page. It's if you go to DaveLandry.com/timing-research-special offers, which is kind of a lengthy URL, but we'll see if we can shorten that. Also, if you check on the TimingResearch.com page, I'm working with David Kosminder to get some follow-up information too. I have tons of information on my website if you're interested. It's free. I have I think like 1,700, 1,800 YouTube videos and lots of good stuff, and about 600 or 700 posts on the website. So check that out, and it won't cost you anything to get started. All right, Barry, let's go back to you. And the question is, it's a two-part question. First of all, what direction do you think the S&P 500 will move this week? And that's based on today's open to Friday's close. And then you want to go ahead and rate your confidence on that by estimating the probability you have correctly predicted next week's market move. And before you answer, the next question is going to be, why do you think it's going to do that? And what developing events, I'm sorry, that you're watching. And when we get to the next question, just so everybody knows, if you want, you could show charts. In fact, we'd encourage you to actually. So go ahead, Barry.
Alrighty. Great. Well, yeah, let me do that. I like that idea. Let's show some charts here. Let me get over here to. Oh, there we go. Thank you. Okay, screen share, and that looks like that should work. Let's make sure it does. Not too used to using.
There it is.
Here.
Yeah, very nice.
You got it? Okay, cool. Okay, and can you see my cursor as I move it around, or is that not visible?
Yeah, we can see it.
You can? Okay, good. So I can point at stuff and you can see it. Cool.
Absolutely.
All righty. So I would say I'm 100% sure that the S&P is going to move up from today's open up until about 10 o'clock California time today. And yeah, I can say that with 100% certainty. In fact,
very nice.
Yeah, thank you. Thank you. I'm pretty good at this stuff. That's the difference between technical analysis and actually trading.
Yes, absolutely.
Everybody can look at a historical chart, but then what's going to happen, you know, on the hard rate edge where there's nothing printed yet? That's a lot harder. We all know
Absolutely.
that.
Absolutely.
So anyway, as I look at the charts here, you see I get my S&P daily, weeklies in the middle, and monthlies on the right. And so those are the fractals that I look at. And what I'm seeing here is I'll look at the monthly first on the far right. So we've obviously broken this level of resistance here that everybody's been watching for a long, long time. And so momentum is up, cycle is up. That's the indicator down here. And a couple of nice bullish candlestick patterns. So actually the way I look at this is, and it can be seen a little bit on the daily charts. Let me bring it over here to the far left here. So we broke above this resistance level. That's the same resistance level. Retraced to it, put in a cycle low. Momentum's above 0, so it's a strong move up, what I was talking about before. Some volume here. This is OBV, that's on balance volume. So the way I look at it is, if the market's strong enough to break through resistance and then its retrace is weak enough to hold it as support, common technique, a resistance becomes support, then that's a bullish sign that the dominant energy is still to the upside. So that's where the trade was, and of course, easy to say now. Now at this point, what I'm looking at is actually, well, at least so far today, today's not over obviously, but we've got 3 inside bars to this bar here. So right now the market for 3 days has been, I would just consider it neutral, but not, you know, it's a little bit of a triangle even. It's a little bit of a triangle if you look at it. We've got lower highs and higher lows. So just, I call these mini triangles where it's just within the bars themselves, not the cycle highs and cycle lows being lower highs and higher lows. So kind of a pennant, if you will. And as far as I'm concerned, you know, that looks pretty bullish. So, and we haven't really confirmed a cycle low here yet, but we've got strong momentum still, although that's an average momentum move up. So 1, 2, 3 waves on momentum, that is an average. Now it can go further, but then we're looking at the exception to the rule. So anyway, that looks bullish. Again, last week was a doji bar, so a bit of a neutral bar. Momentum not strong, so this one's giving me a little hesitation here. Monthly, of course, well, you know, we're not even going to form a whole bar. Well, I guess we'll finish a bar, but not until next week. So this week we'll still have an open bar here. So really can't use that much for my analysis this week.
An open bar.
But everything's up here, so you know. But what does that mean? Trading a bar before it's closed is pretty difficult. So anyway, so my sentiment would be bullish at this point, and my confidence level would be about, I would say, 61.8%.
There you go, a little Fibonacci sneaking its way into the presentation today.
Exactly. And I'm so
All
sure
right.
that I just want to say I'd be able to say with great confidence that I'm willing to bet Lance's life on that. So
There you go. There you go.
I'll finish with that. All
right, let's go over to you, Kurt. What direction do you think the S&P index will move from this morning's open, obviously, to Friday's close? And then rate your confidence to your answer on that question by estimating the probability that you have correctly predicted next week's markets move. And you could share your chart now, or you could share it on the next screen if you like, or I guess you just point over your shoulder. So go ahead.
All right, cool. You can see the chart, right?
Yeah, absolutely.
Perfect. All right. So this is, again, not to rehash what Barry just said, but this is your daily chart of the SPX, and it is contracting in volatility, which suggests that we're going to get some kind of, hopefully some kind of movement that comes in here with the Santa Claus rally. But, I could argue that the Santa Claus rally has come and gone. I mean, we've been moving up since beginning of November. We had this little pullback and have continued higher. So what I'm looking for to happen is an attempt to move up here, maybe even taking out Friday's high, or maybe we just stay inside today and then tomorrow we take out this bar's high and then we come back down. So I'm going to say that we go lower, and even looking at the hourly chart, you can see it's trying to hold. We've got a little bit of a double top up in here, so we'll have to see if that can get cleared. But I think longer term, it's much more constructive to pull back some more rather than just continue to try and move up. You get the Dow 20,000, and maybe that's what people want to see before the end of the year, and that's what'll then bring in a more significant pullback. But I think more constructive to the chart, if I go back to the daily here, is a pullback, somewhere down into this area here. Even maybe a little lower, and retest what was this prior high. I think that would set up a much more significant move higher, one that could last with more significance or more substantially than just trying to continue now. I think that might just be bring in some momentum that is short term, and then we get into next year a more significant correction. So I'm going to say lower by the end of this week, and until proven otherwise, I'm going to go with 100% confidence on that.
Oh wow! All right. So you'd bet Lance's life on that too, huh?
I don't know Lance well enough to bet his life.
I actually had YouTube mixed up based on the icons on the screen. So if I said point over your shoulder, I was actually talking to Lance. So I don't know if you could share those screens. Maybe you could hold one up to your webcam or something, But anyway, same bad questions for you. What direction do you think the S&P is going to move this week by Friday's close? And then rate your confidence by estimated probability you correctly predicted. And you can share charts now or in the next question. Either way. Take it away. That's for you, Lance.
I got you. Thank you. I'm about 90% leaning higher, and we have to look into the scenario. We have a low volume week. We have the holidays approaching. Normally we're not going to see any crazy volatility as we see the VIX completely crash today. I just don't see a lot of fear in the market. I know we have, I think, Yellen speaking upcoming, but I don't think it's anything major. The only thing I think there could be the 10% chance we move lower is, I think the electoral college vote is Wednesday, if anything crazy goes on there. But I'm actually looking for that day. If it goes smoothly, we hit Dow 20,000, therefore the S&P just trades up with the Dow. There's just really just not a whole lot of, I feel like, fear or major selling in the market. If I'm looking at the internals via the NYSE tick, I mean, we haven't hit negative 800 all day today. Just very light volume. I think we slowly drift up. If we hit Dow 20,000, I think the S&P will follow with it too Wednesday.
All right, cool. All right, Glenn, let's go over to you. What direction do you think the S&P? What's your confidence? I'm sorry.
I'm 90% that we
90%.
go higher.
All right.
Not betting my life
Glenn,
on
let's
it.
go over to you. Thanks. I'm sorry about that. Glenn, let's go over to you. What direction do you think the S&P is going to head this week? And then what probability do you think you have correctly predicted that move?
Sure. I'm going to parrot, I think it was Barry. I'm not sure about the end of the week, but I can say 100% by 10 o'clock Pacific will be higher. So I kind of go with that. I'm putting my money on that. But no, in all seriousness, there's a consensus view. I'm bullish through the end of the week, and I'm going to give that about an 80% likelihood. Again, higher by Friday, the close, 80%. And I meant to check. I want to see if I can show you a chart to illustrate or give you some explanation as to my rationale. So do I just hit the screen share? Is that?
Yeah, hit share and then click on what you want to share. Make sure there's nothing
okay,
private that you want.
A screen share. Let's see. So I hit that. And let's see if I can bring. Can you guys? Is it visible? I've got a daily ES, March E-mini S&P. Do you see it or no?
Not yet. We're still seeing the little ship.
Yeah, that's just the. Oh, and that's another thing. I got to get a picture of me. But so you're not seeing my chart.
No, not yet.
Oh, I see. I see. Okay, here we go. I hit share.
And then you click on what you want to share.
Okay. You see the daily
E-mini?
There
we go. Yeah, good job.
All right. Okay. So again, I concur. I'm not sure who was it, but you've got since the 12th week ago or so, you've got that top there. And more or less since the December 13th top through today, we have a little triangular structure. Number one, when you see in a succession of inside formations, one after the other, and you more or less do. It's not perfect, but rarely do you see that. But that tends to correlate with continuation of the trend that preceded it. So that's upward. So from a directional standpoint, so I like that. Number one, so that's one factor, and then all of the momentum indicators that I think Barry indicated. I could easily put that up, but I won't. But overall, you can see clearly trend higher. But here's the primary factor. These vertical lines represent my timing points, some of the past, to show you this was the, going back just to give you some context. In general, on average, they come in at about 80% reliable. So this was June 27. This was pretty reliable, but I don't know how practical. This was perfect, November 4. This was not so perfect. That was, but I wasn't sure how to interpret this last one, November 29. Did it correspond to the top that came in a few days before? Was I a few days late? Or was it pertaining to, was I a few days early? But nevertheless, my next time point, curiously, is this. Actually, it comes in on the on Sunday. I've marked it as December 26 because obviously the holiday, and it comes in this year on a Sunday. But suffice it to say, I'm getting a lot of hits by a number of projection methodologies. I'm getting a cluster of time points between the 24th and the 26th. So that window indicates a high probability zone or window of change. So I asked myself, what is the primary trend doing as it approaches and gets ever more proximal to this cluster, for which I expect a high, a greater than average chance for a change of trend. So it's obviously going up. So that's the major reason why I'm expecting higher prices through between now and Friday, because it's kind of congruent with the end of the week. That's the last trading day prior to the holidays. So that's my reason. Working on the philosophy of market's going to do what it's going to do only once its time has come. I think as such we'll continue moving higher into the next point. After the 26th, I just found out that apparently the markets are closed next Monday, a week from today. So from a practical standpoint, that would push this time window forward. So let's say I expect higher prices into the middle of next week by virtue of the holiday. But as far as the question, that would translate to I certainly expect higher prices into the end of this session this week. Actual price target, my first look, what are we trading now? Around 22, let's see, 58. Before I got on, we were at 22.60. So basically the same. So my first zone of overhead resistance I projected is 22.80. So I can see us being at 22.80 by the end of the week, if that helps. And then I've already above that. I don't see If somehow, we get a surge, if something should happen, and I'm not seeing any signs or expecting that fundamentally or technically so far, but who knows? If we break out above the 2280 area, say by midweek, my next zone of projected overhead resistance is 2321. I don't see that. Here's 2310 on my scale, but 2280 I think is reasonable by Friday.
Okay. And confidence?
And I've already predicted 80%. I'm going to be,
wow.
I'm going to 80%. Given the confluence of trend, the power, I think this is just a temporary kind of recharging of the battery, the consolidation, little triangular structure. But I would say by Wednesday we will have broken out, if not sooner, no later, and then we're on our way to 2280. I expect by Friday.
Okay, fantastic.
Yeah, sure.
I often say, as I said a few minutes ago, you can only predict the short term when it comes to markets. And one of my clients misconstrued that as you could always predict the short term, and that's simply not true. In predicting the short term, I'm looking for a setup, which is usually pullback and related, certain patterns I'm looking for, and then I'm looking for a trigger in that. If it doesn't trigger, it keeps pulling back, then I'm not worried about my prediction because it didn't trigger at all. Now, so with that said, if we're looking at the S&P 500, we really don't have a significant pullback just yet. But what I do in a case like this is I like to err on the side of the direction of the trend. And we're just off of all-time highs in here. So I'm going to say as long as the market is at or near new highs, I'm going to stay long and be long. And I'm going to feel like the market is headed higher. There will be some pullbacks along the way. In fact, that could actually be healthy for the market. And when we get to the next question, I'll flesh out a few sectors and show you why I like the overall market, in addition to the S&P just being off of all-time highs. I did hear the word drift a couple of times from you guys, usually, and I'm not a big fan of seasonal type of patterns, and I also heard the Santa Claus rally brought up. Sometimes you do get this holiday drift higher when a holiday approaches. It just tends to happen in markets. It's nothing that I want to run out and trade, but if you need some excuses as to why it's headed higher, one. So I'm going to go ahead and predict higher by the end of the week, and I'll give myself a confidence of 65%. I guess the only thing that's scary this week is we have 100% bullish in the forecast, except, Kurt, you said higher?
No, I had said lower.
Okay, all right, good. At least we have one contrarian among us. So Kurt will probably be right. So, well, good. That makes me feel a little bit better, because if we were all bullish, that would make me a little bit nervous. So good to see that somebody out there is seeing it lower. Okay, I've already answered the question, but let me just give it to you too. I know I kind of mixed it up and added two or three questions together. But are there any specific reasons you think the S&P will head higher this week? Anything that you haven't already said, or is there anything you want to elaborate on?
Yeah, I did answer it. I guess I gave a longer answer than maybe I should have, because I did go into it. No, that's pretty much it. People talked about seasonality, so certainly the Santa Claus rally, all that kind of stuff. Yeah, I can see that. But when, like, for example, I noticed in a lot of the respondents to the survey, which I always really enjoy reading, the individual responses to the answers that people give for their reasons for it to go higher or lower. So I just thought I'd review a couple of those real quick. So a lot of them talked about, well, it's the season, basically talking about markets tend to go up in November, hold till May and go away. Well, the question really was, what's going to happen this week? So what happens between now and May has nothing to do with what's going to happen this week. So Santa Claus rally, yeah, maybe. I thought it was also interesting that one of the reasons given for the market going higher based on the people who answered your survey was the Fed decision is behind us. And then one of the reasons for the market going lower, on the other hand, was the Fed decision. Mm-hmm. One of the reasons for the market going higher by some people said just Trump, one word, Trump. And then one reason that people said the market would go lower was the Trump rally has been digested. So, I guess, another one was people said, well, the market's going to go up because it wants to reach 20,000. Other people said, well, it's holding below 20,000. So that's resistance. Now it's going to go down. So I just thought that was interesting that you get people saying the exact same thing and then extrapolating totally different forecasts out of it. I guess that's what makes a market, right?
Yeah, and that's what makes a market, and that's it's good that you pointed that out. And for anyone who's actually reading the report and notice that there is this dichotomy between the answers on the same exact news, and that's something that you wrap your head around. You're not trading other traders, and those other traders might have different opinions or might buy and sell for a variety of reasons. They have nothing to do with the market itself. So yeah, good point on that. Thanks for pointing that out. Kurt, let's go to you. Any developing events that you haven't mentioned so far with the markets that might affect your prediction for this week?
I think some things to keep an eye on, and I can bring up those charts again.
Sure. And while you're doing that, just an FYI for everyone here, it's a newer feature to the show. It was added by the Wiz one time when he was hosting. But if you have a trade of the week you want to provide for everyone, if you don't have one, no problem. But if you have one you want to throw out to everybody watching today, that's seems to be a popular feature of the show. So think about that, and towards the end of the show, I'll ask you about that. All right, go ahead. I'm sorry.
All right. So the financials, obviously financials have been incredibly strong. You got names like, I can bring it up here, JP Morgan, which switch this to a daily, incredible run higher. Goldman also. I do some coaching sessions as well, and I've had these levels drawn from longer term time frames, and so you can see that we've just taken these out one after another. So I think that this is due for a pullback. I think that's somewhat of an understatement, going back to the XLF here. And you could see on the daily, it already dipped below this consolidation area. And looking at the hourly, you can see in a little more detail that it's really just been a very fluid, relatively fluid move down through this area here. So now retesting it from below should act as a bit of a ceiling. And so this pulling back in could weigh the S&P down, and as a result pull in the S&P. And also you had the transports, which have been strong as well. And again, this is an hourly chart. You can see it's been pulling back in as well, and does have some more room to where it could fall a bit more. And even going to the daily chart, you can see how that line I just drew aligns with this support on the daily. So I'm looking for these things to pull back in as well. And so what led the market higher, I think, can also weigh it down a bit here as we head into the rest of this week, maybe even into year end. But I think these are things to watch for. And even, just since we're talking gold, finally broke. Well, I should say GDXJ finally broke, but gold has been under this key level of support going to the weekly here for a while, and doesn't really have any reason as to why it should stop falling other than minor pauses until it comes down into this range here just above 100. So that could continue to play a part in just overall movement as well. But if you're basing your analysis on the fact that gold is down quite a bit and due for a pop, maybe that also will bring the markets in. So those are some of the things to definitely watch outside of some of these other headline type of reasons.
Okay, cool. All right, let's go over to you, Glenn. Any developing, Lance, you're next. Lance, any developing events for this week that you haven't already mentioned?
That I haven't mentioned. The Electoral College is, really one thing that, it's going to get a lot of media attention. So I think that's just a headwind for the market. If, all goes well, I think that's bullish for the market. If there's some kind of negative news and something like that, then I think we might see a dip in the market. But really, usually these weeks where we have, a holiday week, Thanksgiving, usually they tend to just be bullish for the market, light volume. You're not going to have any major selling occur So, short term for this week, we kind of slowly grind higher. As long as everything's just smooth with the electoral college outcome. If we hit Dow 20,000, great. If we don't, I don't think we're going to hit Dow, 19,200 or something like that. So, it might be a defensive week for traders out there, but at the end of the day, I still think we grind higher.
Okay. Glenn, any developing events that you haven't mentioned just yet?
I'm hard pressed. Yeah, it's what I always attempt to do in trying to kind of generate or project some scenarios is well, first and foremost, I'll go back, or are we seeing the chart, or what do I? Maybe I didn't hit that.
Not yet, but
where's my screenshot button? Hold on. 1 second.
I'm going to share mine at the same time, so hopefully it doesn't confuse anyone.
Okay. Let's see. Screen share. I'm not seeing the button again. There's a
if you hover to the left, you'll see a green button, and then you hit.
Here it is. I got it. Okay,
yeah.
I got it down. I got the process down now. Okay, so bring this up again. What I was Okay, can we see it now? This is the same chart I had up in the previous question. Okay.
Yeah.
So my usual starting point of trying to discern what's at play and what's propagating price action is to start from the vantage point of my timing line. So that's what these vertical points are again. The order of technical models and concepts and relationships I tend to focus on. Trend is always at the precipice. It rules everything. That's number one at the top of my totem pole. A close second is the timing. And thirdly is Elliott wave. So it was something that came up in a previous question where someone was saying, you get two people looking at the same thing, and you get for the same underlying objective data, you can reach different conclusions. One of the problems, obviously, one of the obvious critiques I hear all the time in teaching is the ambiguities that arise out of, Elliott wave because of the graphic nature. And granted, that's the case. When you begin to layer in some more quantitative concepts, it gets a little more objective. And I know that obviously models and systems and strategies that are more numerical based are more purely objective and don't have that problem. The problem is they're more, they're binary. In other words, the interpretation is black and white. And to the extent more and more traders obviously see that and get a hold of that, it tends to get discounted by the market. On the one hand, that's the problem when you're focusing on a numerical idea to try and figure something out versus a more graphic idea where you get the obvious ambiguities that immediately arise out of it. But here's my short version. What I'm saying is I always yeah, too late for the short version. Okay, I ran out of time. Okay,
it's okay. Good. Keep going.
No, here's what scares me, and this is why I had to really refocus something, because I noticed that Kurt is the only one who has a bearish view till this week, and I really think hard about that, because it forces I spend 90% of my time trying to figure out what have I missed or what am I not taking into account. And so the fact that he is bearish, at least for the short term, going into the end of the week, let's say, I'm asking myself, what could happen? So between these vertical lines, I say, okay, if I'm expecting that those are points on the temporal dimension for which I expect change, and more or less assume that the trend will persist unabated until it reaches one of those points, more or less. I try and figure out, okay, what events fundamentally would serve as catalyst or trigger in the real world to make those technical projections, manifest. So again, I think Lance mentioned the Electoral College coming up, the situation. I don't really see anything happening there, that's going to be surprising. I think the market is basically going to run on the sanguine opportunity of and hopefulness of the new administration coming in next month. And so my wave count, if I'm not going to take the time, but starting all the way back, the long-term wave count from this bottom January, that's your 1 for those of you who are Elliottians, and then I'll just do. This is your wave 2 correction, very classically, very deep. Your 3 is going to go all the way. Let's say This is your 3. This is the 4. I won't bother. This is the Brexit. This is your little internal A, B, C of your 4. And all this is your 5 into the what was at the time the all-time high for the stock market, August 23. And so here's my Elliott wave. This is your A down to November 4. I will discount this tail. That was the election volatility of, right around the election day. But November 4, I think, was the legitimate end of the A wave of the ABC correction. We have what's called, in Elliott parlance, an irregular B. That's why I think we're rallying. So from a technical standpoint, going all the way back to the beginning of the year, 1, 2, 3, your ABC 4, your 5th, what was at the time the previous all-time high, August 23. Here's our A. We have an irregular B. Irregular from the standpoint it breaks the market into new price territory. It's taking out the end of the what you would think the all-time high. But I think and I think it's going to persist into this next time point if I can place any confidence in that. Here's what scares me, and this is the point of what I want to say. And this is coming back to what Kurt was saying, why he's the lone bear here today. This is a lot of space. If I'm even halfway correct about these time points, my next time point isn't coming in really till the end of January 30th and February 1st are my dates. So it's basically a couple of day window there. So that means if this thing tops out, we've got a lot of time for which the market could, if it has an about face 180-degree reversal. So I'm asking myself right now, what could happen? Because that potentially bodes quite ominously for stocks in general in the equity sector. That's number one. Okay, and then I'm at one final thing I'm going to say, and it's piggybacking on what someone else was saying, intermarket relationship with gold. Okay, so here's a daily gold chart. And someone was saying, well, can the market break through? The reason the market, in my estimation, stopped where it did just a couple of days on Friday, it's that 78, that's your Gartley Fibonacci level. From the entire move up, the bull market move we had all of 2016, from this bottom here, December of 2015, a year ago, kind of right now, through the top in July 6th, we've had an A, B, C, to almost textbook Fibonacci Gartley retracement. So one thing is going to happen. It's either going to respect that support at 78.6 or it's not. And so I think as long as I think we're nearing a critical point in the stock market, which would in turn correspond to a critical bottom of support in the precious metals. So watching those two together watching either one will give me a clue on the other by kind of inference, I expect. But again, coming back to your question, Dave, I just don't see anything really fundamentally. I think we're going to, unless something happens, anything can happen, but I'm not aware of anything salient on the fundamental front that's going to create this. So I think more or less by default, this thing is just going to persist into the next time point, which is basically to our question Friday, but it corresponds if this can be trusted, it actually comes in on Sunday. So that's why again, whatever is going to happen or doesn't happen, I think it would be consistent with that. So I kind of work backwards, try and figure out what the charts are telling me, and then look and see what's coming out potentially, or look and try and imagine what could occur. One final point, on January 11, I've got an ominous cycle. It is inherently bearish. I would give it about a 65% probability. That's why I didn't put it on the screen. But that, after we get through next week, I'm getting a preponderance of negative cyclical data suggesting lower prices. And the run time, if it should extend, is basically a month. So that suggests, to the extent markets, there is some linear type of proportionality, that's suggesting a lot of pressure is to come in the first month of next year.
Okay.
After we move out. Okay. Yeah.
Okay. I'm going to go ahead
and
I'm going to answer that, the developing events, and then I'm going to go ahead and getting a little feedback. I don't know if somebody has a mic that needs to be muted or not, but I'm going to go ahead and answer the developing events question and then the next question, just because we're running a little short on time. As far as the market itself, why I feel bullish, one is a trend follower. I'm not going to argue with the trend as long as we're at or near new highs. As I said a minute ago, the S&P 500 just kind of pulling back a little bit in here. NASDAQ doesn't look quite as impressive, but it's just off of all-time highs. And the reason it doesn't look quite as impressive is because barely got above the prior range. We dipped back into it, but came right back out, and that's usually a good thing. And then we made a little bit of a range right here, and so far we've kind of tested it, and we're holding above it. But we don't have the acceleration higher far away from that range like we saw in the S&P 500. And as an example, let's take a look at the Russell 2000. I like the Russell because it's a very broad-based index. And the Russell, if you've been following me for a while, let's take a look at the weekly real quick. For a long time, I talked about the fact, that the Russell has just kind of traded sideways for a few years in here, and it wasn't making any progress. But obviously, recently, that all changed when the market broke out to all-time highs. So far, so good in the breakout. It had a nice little breakout, nice little pullback, and hopefully, and I know I hate to use the word hope in this business, but hopefully it's going to be a rinse and repeat many times and continue higher. So I feel good about that. As far as the sector action, throw a dart. Most sectors look pretty darn good in here. You can see banks just kind of pull back a little bit. Insurance and other financials all looking pretty good so far, just kind of pulling back a little bit. I know that who was talking about earlier, I think Curtin's in the financials. I'm still bullish on the financials until proven otherwise. As a trend follower, I don't try to predict the end of a trend. I just follow along. And then retail, you can see I've got a big down arrow here, but now we've got a short-term up arrow. So some of these areas that have been doing really bad in here, like retail, have begun to turn. And obviously, certain areas, as you would expect, like materials and construction, have been doing fairly well in here. I suppose if you're going to build the wall, it's going to take some bricks and some mortar. So these brick and mortar type of stocks are doing fairly well. Now, a couple of more points I want to show you, and then I'm going to go ahead and answer the next question. First of all, if you take a look at metals and mining, so far we just kind of pulled back in here, albeit a fairly deep pullback, but that's okay, especially if you're going to wait for an entry before looking to get long. And my trade of the week that I'll be showing you in a few minutes is going to be an XME, and I'll give you the parameters on that once we pull the chart up. But if you take a look at like steel, copper, aluminum, and for my friends across the pond, I guess that's aluminium. So far, they've just had these deep pullbacks, and that's fairly normal, especially for something like a commodity-related stock. But obviously, if you look at gold and silver, they're not doing so hot. These are the actual stocks. So those are in a down, or obviously in serious downtrends, and you certainly don't want to rush out and buy gold. And a lot of people are bottom fishing, and they want to buy gold, and I think that's a really at this juncture. So as far as the market is concerned, the market, I think, is in fairly good shape. Most sectors are looking pretty good. Again, throw a dart. Transport's looking pretty good so far, just pulling back. I know there's a lot of people that watch the transports and claim that's important. Me, I watch everything, so absolutely I'll put that as a check mark as something that's looking good, pretty good. But the only thing that's really suffering are a few interest rate sensitive areas, such as the REITs haven't been doing so hot. Retail hasn't been doing so great up until recently, but now it's going to take off. Drugs have been a bit of a mixed bag in here, but there's enough other sectors that are doing really well. It's got me excited about the market. Now, let's answer the next question. And the next question is, do you invest in gold in some form? And my answer to that is no. And the reason I don't invest in gold is because there are no good long-term investments. And I don't know if you guys can see that. I put the link in here. I found the link a second ago. I wrote an article a while back. There are no good long-term investments, and cash is not trash. So if we get into a choppy market or a market that's headed lower and you're not shorting, then it's okay to sit on some cash. Cash is not trash. And the reason I say there's no good long-term investments is because they are no good long-term investments. So let's say you want to invest in real estate. Well, obviously, we've seen some bubbles there over the last 20 years. If you want to invest in these other areas, let's say stocks, NASDAQ lost, I think, 78% of its value in 2000. So if you're in tech stocks, that would have been a horrible investment. Now, again, I'm slotted as a swing trader, but I'll stick around as long as positions move in our favor. And we got long, and I'll just show you real quick. We got long at stock way back in February. We got a little swing trade profit out. And so far as trend followers, we're just following along. We got a signal right here, profit right around here, and so far, again, through a trailing stop, we're following along. So I do not invest in gold. I do have some physical silver here, and that's just simply because I've accumulated it over the years with no intent of accumulating. It's just some silver coins that I've had for years and years. I started buying silver as a kid, or collecting silver, I should say, as a kid. I actually would buy it from the kids at the schoolyard. And at one point, my portfolio was worth a lot of money doing a silver bubble, but that all blew up, and that was my first lesson in bubble. So I don't think there's any good long-term investments unless something continues to go up. stick with it as a trend follower. Don't try to outsmart it, and don't try to pick bottoms, especially in something like gold right now. So I think I answered both A and B on that question. So let's go to Barry. We're going to ask you the same question, Barry. Do you trade or, well, I trade gold. I will trade gold. Let me just on that. If gold is headed higher, then I'll be buying it. If it's headed lower, in some cases, I'll actually be selling it. But there's been a few times over the last couple of years where gold stocks have made some nice little bottoms, like back in early 16, and we will buy gold stocks when that happens. But as far as an investment, no. As a trend follower, if it's going up, I'm long. If it's going down, I'm either out or short. So Barry, same question to you. Do you trade or invest in gold in some form? And the next question is, if yes or no, why or why not?
All right, thank you. Yeah, I definitely trade gold. I don't, like you, I don't invest in it. I don't know, just never really resonated with me. I've heard all the stuff about, well, gold is the only true currency, or some people say it's God's currency and all that stuff, but I don't know. As I've, I'm a trader, and so I've been watching the markets, and I've been watching charts for years and years, well, decades. And, just like you said, I agree with you 100%. Gold goes up and down like everything else. And so I'll trade it. Yes. In fact, I day trade gold futures even. And, if it gives me a good setup, I'll take it just like I'll take anything else. And I'll swing trade gold. So I'll hold it for, days, weeks, even months sometimes. But no, not as far as a long-term investment, because for me, I just look at the charts and I'm like, well, I just don't see it. I'm not that big into investing in the markets anyway. I'm not a real investor. I'm a trader. And so I have other ways of investing my money long-term in my pension plan and so forth. But yeah, so I agree with you totally on that. I really don't have much to add. I think you made the point as well or better than I could have. So
wow,
I agree with you 100%.
Yeah, cool. I see Lance looking over his shoulder. Anything exciting going on over there, Lance, that we should know about?
No, I was actually, you guys are talking about gold, and here I am watching the gold futures melt away. So,
oh, wow.
Bring up the gold discussion, gold futures dropped 4 points.
Cool. Well, while we have you, let's go ahead and get the question answered. Same question to you.
Yeah, so, I love physical gold and silver. I actually just bought some silver Friday, and not necessarily as, hey, I'm a doomsday prepper, I think the whole market's going to collapse and gold's going to double, blah blah. I always say to people, this is coming back from my CTA background, I have a lot of friends who who collect gold and silver, whether it be pawn shops or just gold, collect coins and such like that. And I always make the joke is every time I see, we buy gold signs or gold popping up and your, retail or mainstream audience, time to start selling everything, or to start shorting GLD, gold stocks, put options, selling calls on gold futures, whatever it may be. And actually a couple of weeks ago, I was actually speaking with the owner of a coin shop, and he said, hey, if silver gets to 16, I'm going to leverage everything I have and just stock up on silver. Well, I haven't spoke to him since, but I can only imagine, how that's working out. So, I love trading the gold futures, whether it be spreads, directional, day trading, swing trading. I love physical gold and silver, the bars and everything. As investing in it, I think one should always keep in mind, okay, if the market does collapse, that's one thing. It's, debate that forever. But at the end of the day, you can't, go to the grocery store, shave off some gold and say, hey, here's the gallon of milk I'm paying for it via gold. So, and you can look at other investments.
Well, you could, if you're prepping, you could get some silver dimes, and maybe that silver dime will buy you $100 worth of groceries, but that's another conversation. So I hear you though. I know what you're saying.
And I have many friends who are just complete bears on the market, who just love gold and collect gold, and all they do is buy gold. And you ever say, hey, sell gold, they don't know what sell is. But as far as trading point of view, I agree with your statement of trying to catch a falling knife, just like the crude oil decline we saw. I think you just going out buying gold and silver here, you're just bottom fishing. That's it. If you say, hey, gold futures get to 1100, then I think that's support. Maybe I'll start building a long-term position, sure. But I always say the NASDAQ, the S&P, the Russell, they're sprinters. They're going to move quickly and rapidly, so they can have a V-shaped bottom. But when you're looking at, let's say, bonds or gold, they're like marathon runners. They're going to move slowly and trend better. They're not just going to put it, you're not going to see gold drop and then just come back and have a full retracement like a V. So that's something to consider. If that's your thing, if you like it, I can't shame you. It's totally up to you. But long term, it's not something you just go out and buy. If you want to build a position, hey, 1100 in gold, 1615 in silver, hey, it's up to one's point of view. I think it could hold support, but it really depends on 2017 and how aggressive the Fed is.
Gotcha. Yeah, I mean, there's nothing wrong with holding some, but just don't jump in and say, I'm going to invest in this for my kid's college education or for some particular reason. But yeah, you could hold a little bit just in case the.
Right. I turn over and say, man, these individuals, are leveraging everything they own and taking out a mortgage to buy silver, and I just.
Yeah, I mean that's really scary, and commodities, no matter what it is, could always halve from where they are. Kurt, let's go to you. Do you trade or invest in gold in some form, and if so, why or why not?
Yeah, I mean, you guys basically have already said most, if not all, of what I would have said or was going to say. I mean, trade it, yes. Invest in it, no. I think there's other places you could look to put your money from a longer term point of view. But following up on what you also said just a minute ago, you have to have a reason. It's not like, oh, gold is getting hammered or silver's down a lot. Let me just try and pick up a little bit here. You've got to have reasons more than just a feeling. There's got to be a reason based on the chart, whether it be support or resistance to why you're going to do something confirmed by trend, and some indications that the move lower in this case is over. And as far as gold goes right now, I don't see that. In fact, we could pull up, I'm not going to do it now just to save on time, but you could look at a longer term chart of the dollar, and that's breaking out above a key level, and that's going to tie into the trade that I'll show you here in a little bit. But the dollar looks like it's getting ready to break out from, or it is breaking out from this long-term level to begin a brand new uptrend. And as I show you the charts here in a minute, you'll see that it has been in a basically 2-year range. So going forward into this year, we could see a lot of strengthening in the dollar in the market, weakening in euro US dollar, which I've been talking about since July. But to get back to your point, trading gold, yes. Investing in it, no, for the reasons you guys already went through.
Yeah. All right, Glenn, same question to you. Glenn, we lose Glenn?
You with me?
Yeah.
Okay. No, Dave, you pretty much, it's easy. I agree with all of the above. Ditto. And I like what you said, Dave, barring the zombie kind of apocalypse, I'll trade it. And even if I do that, I'm more inclined to trade silver. It tends to be more volatile as a trading vehicle, but you would need to see something salient and extreme. I know there's been people, analysts and certain people saying potentially the Chinese yuan might usurp the dollar. It would take something like that to bring about a longer term view that I would even consider for gold as a vehicle. But I'll trade it given trading signals. But barring that, I'm seeing, and I think Kurt just said, we're seeing strength right through here in the U.S. currency. So that would be, I would be therefore be, from an intermarket standpoint, that much more disinclined to trade or think of gold as a longer term investment vehicle. So no, I agree with all of the above.
Okay. And I'm going to go ahead. That's one of the problems with the show. We don't have enough controversy. So once again, we don't have enough controversy. But I'm going to go ahead and show a particular trade of the week. And if you guys start thinking about what you might want to show, go ahead and show that now. And you don't have to show anything. It's just kind of a little bonus feature in here. I'm not a big fan of trading ETFs, and what I do instead, like I just showed you that little CNX, which is a mining stock that's up about 120% so far this year. I think 200% overall this year, but since we got in about 120%. And I believe in trading inefficient markets, and meaning usually an inefficient market is going to be something like a smaller cap stock, or in this case, a mining stock that has the potential to make very large moves over a period of time. I will trade more efficient markets. I do have a Forex position. I have one Forex position on right now, but in general, I just prefer trading stocks because they tend to be a little bit more inefficient in their moves. Now, with that said, I'm not a big fan of trading ETFs, but for purposes of this show, I think you could go long the XME, which is the metals, and an entry probably around 33, which would be right around this high. And that means that it would actually have to rally up. You're not trying to buy it as it drops here. It would actually have to rally up to 33 to prove itself. And if it did that, go long, and then maybe have a pretty wide stop in here, maybe down around 28, so about $5. Give it about $5 worth of room, and that would be your initial profit target. So $5 plus 33, like 38. Take half profits there, should it get there, and then trail a stop higher. Now, obviously, this is all for educational purposes only. But so far, if you go back to the metals and mining, and obviously, if you take a look at like steel and you take a look at copper, this is a pattern I call a double top knockout. You get a double top, you get a nice little pullback from it, and this all happens after a big trend. A lot of times, this market will pop right back up to the old highs and then beyond, because everybody around here, all the people who like to short, and the shorts tend to be a little bit more aggressive, tend to be top pickers. They're like, oh, well, that's the end of this market. Let me just short with both fists. They'll get squeezed out. So gold, aluminum doing pretty good in here. Last little pullback notwithstanding, but still looks decent longer term. And obviously gold and silver aren't even bringing up the rear. They're in serious downtrends. These are their actual stocks. So my thinking is, first and foremost, I look at everything on a setup by setup basis. So if you did get long, I'm sorry, if the XME, if you did look to get long the XME, if I can get it back up, and it did begin to rally in here, not that I would play gold and silver in and of themselves, but if they did have just a bit of a dead cat bounce from these levels, as long as those other metals are rallying, you could see one heck of a rally overall in the XME. And again, as a trader who likes to trade more inefficient markets, I would strongly urge you to drill down, no pun intended, within the metals, or dig deeper into the metals, pun intended, and find some individual issues that look a lot like this, pulling back, and then maybe look for a little bit higher volatility reading, so you have the potential to make a much bigger move. But as far as gaining exposure to the area, again, if it hits around 33, or hits, let's just say, whatever this high is, takes out that high, I would look to get long, put a nice wide stop in at 28, because if it comes all the way back to 28, then obviously the trade has failed and you have to move on. And curse me if you want, I don't care. This is all for educational purposes anyway. But that's the trade of the week from me. So let's hop over to, let's go back to Barry. Barry, you have a trade of the week for us? And if not, no problem. We'll just move on.
All righty. Yeah, thank you for that. And great analysis. That's very interesting. I love that. I don't really have a trade of the week, but I do have something that I would like to share. And so let me get my screen coming up here. Let's see if that did it.
Maybe that's what we should say, a trade of the week, or a little tidbit, or a little nugget. We'll do that. We'll add that in.
Little nugget. Little
Gotcha.
Trading tip here. Okay. Can you see yeah, you should be able to see my screen now. Okay.
Yeah.
So I'll make it real brief because I know we're pressed for time here, but I think this is very valuable. At least I find it very valuable for me in my trading. It works very well. So there's two things I look for. One is over here. I don't have a trade of the week, by the way, because I went through and I looked at a lot of the markets that I trade. I look at a lot of non-correlated markets, and I just didn't see anything that, at least for me, the timing was right now. So I'm always waiting for the most opportune time based on my methodology, and the timing just isn't for today for anything that I trade, at least. So what I look at, though, just to give everyone an idea, is I'll like the spiders is up here, and then I have a McClellan summation index and a moving average of it. And so, we had signals, for example, as it's moving down here, and you get these little moves up. So basically, it's coming down 1, 2, 3, 4, 5, 6, 7. We reached an extended wave here, and that also, by the way, if you look at this low, which I'm sure you guys are aware of, but maybe some of our attendees are not, that came in right at the 200 moving average, and it also came around the election time. So you combine that with 200 SMA, and you combine that with an extended move down on the McClellan summation index. That was just a great place to take profits. This is a Stochh RSI of the summation index. And so these are where I look to time my entries to go short. And then here, of course, we're saying, okay, now that's extended. So, and here we actually had another opportunity to go along, because now we've got the higher low. And even that little wiggle there, believe it or not, is a buy signal. But as you can see, there's no buy signal for me based on this for timing. The other thing that I'll just share is relative strength that I look at. So we'll just look at this with the major equity markets for right now. And so what I do is I use it on percentage change chart, percent change. So here's 0. I go back 90 days. And so they always start at the same spot, 0% change. And the black one is the S&P. And then the magenta one is whatever market I'm comparing it to. So this is a way of attempting to outperform the S&P 500, the standard benchmark most people use. And then this indicator down here is simply plotting the difference between these two markets. It's as simple as that. So right now, you can see, okay, relative strength, the Russell's outperforming the S&P 500 based on this metric. But that's not really what I would look to trade. For me, that's too late. The story is already done. So what I look for is I'll draw trend lines on this, for example, here. And then I would look to get in here, for example. Let's see if I can bring up a quick trend line. And again, I won't spend too much time on this. So, okay, well, it's not a very good color. But anyway. So
yeah, we get the idea.
Yeah, so on this trend line, that's where I would look to trade the Russell, because it's been underperforming the S&P, and I'm looking for that rotation between the two to then outperform the S&P. And so I'll do that on any market. You can do it with stocks, you can do it with ETFs, you can just do it with other major indexes. So, the Dow, again, has already been outperforming for a while. And so I wouldn't get in now, but I would look to get in when we saw the rotation. And the NASDAQ's been underperforming. So
okay,
let's leave it there and let our other guests give us their feedback.
Good, interesting. And while we have you, we're a little pressed for time, so let's go ahead and if you have any closing thoughts about your trading or anything else, and or Top Dog Trading, just let us know that right now, and then we'll move on.
Oh, okay. I'll just say that real briefly. I introduced myself and my company at the beginning. So if anybody's interested in what we have, we do offer a free mini course for people to test drive our trading methodology, which I call the 5 energy methodology, trading the 5 energies of money flow into the market. And we look for the preponderance of evidence between those 5 non-correlated energies of money flow. And you can get that course absolutely free by just going to topdogtrading.com/free.html. And you get 5 videos, including 1 trade strategy that's actually a tradable strategy right there. So it's not just theories. And of course, I recommend that people trade it on simulator or demo account first, and feel free to email me with any questions. But that's the offer that we have for your viewers today.
Cool. All right, Kurt, let's go over to you. You have a trade of the week, and if or if not, show us that. And then if not, tell us a little bit or anything else that you might want to tell us about your trading or T3Live.com.
All right, awesome. So just real quick to follow up on something I was talking about earlier, as far as the financials and just in general, the bearish sentiment, I'm not bearish beyond the end of this week. Longer term, I'm very bullish. But I also want to point out the VIX, which is also coming down today. And for those that may not know, the VIX is an inverse indicator. So if the VIX is down, market should be up. It is up a bit here today, not maybe as much as you might think. It's also coming into this prior low, which could then bring in more demand, which would confirm, either the market does pull back more, or at the very least doesn't continue higher. So that also is something to just watch for going forward. But like I said, I just wanted to follow that up as well. As far as the trade, it's more a trade for the next couple months to throughout this year, even as it's just a longer term idea, and it's on the euro US dollar. As I mentioned earlier, this is your 2015 low. That's what this line is here. We're below that now. It's staying weak. If I go to a weekly chart, you can see here, this is that reference point that's now being broken. And this has been a 2-year base, right? From 2015 through this year, we've just been in this range. So now breaking this low opens the door to where do we go next? Are we beginning or resuming a downtrend, or are we breaking an uptrend? And to answer that, you've got to go to the monthly chart. And so as you can see, we had this move down in 2014, really nice. As I said, 2-year base. And now we're basically resuming that prior weakness. So my thinking, my bias here, my trade idea is such that we will see not only euro US dollar breaking below the 1.0 level, but continuing down to somewhere in the 0.85 to 0.80 area, effectively giving us, a measured move type of scenario where it replicates the distance or the move that we had in this 2014 period. So, I'm looking for something on the scope of this, or maybe a little more, to occur as we head into 2017. And just to follow up on what I said earlier about the dollar, I mean, here's the dollar index, which is also breaking above what you could argue has been a pretty wide 2-year base or range as well. So things are definitely looking up for the dollar, and in turn, I believe the market as well, following the analysis here as we look forward into this coming year. So that's the trade idea. And as far as getting in contact with me, I know that there's going to be a link posted to a free report that I've done for Forex. So you can definitely check that out. And also, if anybody's got any questions or wants to kind of get a trial to what I do, see how it works, they can email info@t3live.com.
Cool. Yeah, I'd like to see that euro down around 70, 80 cents. I was my first trip to Italy was in like 2008, when it was like twice.
Yeah.
And that was pretty painful. I'd like to go back and get some money back on that deal. But yeah, thanks for bringing that currency up. That's going to be fun to watch. And I've been watching those. That's interesting. I'm glad you brought up the longer term charts on that. Glenn, let's go over to you. Any closing thoughts or anything else, or a trade of the week, if you want to throw that out real quick?
Yeah, I was caught unprepared, and so I forgot that that's a new feature, so I had to think quick. And Kurt, I similarly agree. I like the short on the euro and expect that. You got that obvious triple bottom that he mentioned. So the way to answer the question, the next direction, I think, is how does the market respond to that? And so far, we're seeing evidence that it's looking like it's going to break through that critical support. The mirror image, obviously, in the U.S. currency. So again, qualitatively and directionally, I expect further declines in Euro USD. The only thing I'm a little, again, at a deficit because hadn't prepared, but what I would want to do, and I haven't had a chance, but I'd want to project out into the future the run time for that. If I could get a handle on how long I expect the motion downward to run, assuming it does break through the support, and I expect it will, that would indirectly give me some more precise insight as to how far it could go. In lieu of that, I would just do some Fibonacci projections and things like that. I like the measured move idea I think Kurt just mentioned, but that would be my trade of the week. When I realized he was saying that, I shifted, and this is kind of vis-a-vis what you pointing out the strength of the trend. I like the idea on a continued break in treasuries, the 30-year and the 10-year note. The only thing I would say, so if we break down below support, and I know it would take nerve to do that because we've been falling for so far and for so long, but assuming maybe let me just show you this screen here, and I would filter it with some standard oscillators Hold on, let me just bring this up. Okay. Screen share. Okay. Oh, let me just. This is the 30-year Treasury. What I like to do, is mix up some things. And so, for example, this is where is it? Okay, this is a CCI, commodity channel. So you can see where we are, where we've come from. If this generates or falls below the minus 100, that would by one vantage point generate a sell signal. If at the time that should occur, my oscillator, this is standard 14-period RSI, if it's not in extreme oversold territory, and you can see currently it's about 34. If we can get a sell where we break through support in any aspect or any portion of the interest rate curve, I like that as a trade. That may not be the trade of the week, but on a contingency of a breaking through that obviously support, and one of the indicators I would use explicitly would be the CCI. If we get a sell signal via that, and at the time it occurs, it was, I'm not showing it's extremely oversold, I would be inclined to look at the short side. Further, just based on the momentum building up, it's almost, you look and see how far it's gone, but we've got the fundamentals, just the Fed coming out last week, with the hike, and suggesting they're going to increase in the next few months. So that fundamentally is congruent with my technical, assuming it does so. So that would be a trade that I would be thinking about. But first and foremost, I agree with what Kurt was saying. I like playing the short side of the Euro USD. Yeah.
Cool. All right, Lance, trade of the week and any closing thoughts?
Everyone mentioned the Euro, and here I am thinking, the Euro. I'm right there with everyone, the monthly breakdown on the Euro. Looking for some downside in the Euro, hence the strong dollar. I guess I'll just throw this out there because we actually just saw within the past 15 minutes some unusual option activity here in Netflix. And the stock just popped nearly $2. Usually for all the stock traders out there, once a 2 standard deviation event or higher, whether it be earnings or what, the stock will tend to gravitate in that direction. And in Netflix, obviously earnings were a big boost to Netflix. The stock got to, I think, 129.29 with the all-time high right around 133. If you look prior to that split there, or post-split, pardon me. And just really looking for some continuation of that move here in Netflix for all the stock traders out there, for all the longer-term swing traders out there. We're about $3 from that 129 high post-earnings. And usually that high will be like a magnet and will tend to gravitate up there. So if you're looking at options, I think the January expiration covers Netflix, or if you're just trading stocks, a lot of rumors hitting, backed by unusual option activity, whether it be a deal with Disney or Apple, whatever it may be, but just something to keep an eye on out there. If in form of contact, we do have a futures room at Alpha Shark now, and also a live options room. And anyone can email me, lance@alphashark.com, for any questions, details, anything, comments.
Cool. Okay, I'll try to wrap it up quickly here since we're running a little late. Dave Landry at davelandry.com. If you have any questions on anything, you could actually personally email me at david@davelandry.com. I do have a ton of stuff on my website. I have a daily trading service with actionable signals, so that CNX that I just mentioned, or if you come to the weekly webinars, I do a weekly webinar, and they're free too, every Thursday. We'll take a break next week, but we'll resume next year, and we'll have one this week on Thursday. Every example that I show, or 99.9% of every example that I show, comes straight from that trading service. You could actually follow along for free on a delayed basis, and I call that foresight and hindsight. So you can't say there's any hindsight involved, because you'll see every trade on a delayed basis, and that's completely free. The paid service obviously is not. So come to those weekly webinars if you have a chance on Thursdays. Check back on the TimingResearch.com site. I've been slammed with quite a few things over the couple of weeks, but I do plan on getting some things launched with David Kosmider page. And also I put a link in there to one of the articles that was referenced in today's show. I don't know if it'll come out on the Google Hangouts, but if not, you could search long-term investments on my website to get that article. And also they have a Timing Research page on my website that I mentioned, which has some special offers and all. And those things we'll flesh out more once Dave and I get some of these things up and running. So check back often there, and then feel free to peruse the website and download anything you want off the website, and then also come to the weekly shows and ask some questions. You don't have to spend any money to get started. I'd rather you get to know me first and then see if it's right for you. Anyway, I think that sums it up. Great show. I'll let David give the last thoughts or give everybody's website's address out once again. But thank you guys so much for being here. I love doing these shows. I learn a lot. I pick up a lot. So from a selfish standpoint, it was great for me to be here again this week. So and thanks again to David Kosmider for having me back. All right, David, show's back to you.
All right, thanks everyone. For everyone watching, I just want to remind you to hit the subscribe button for YouTube, so you make sure to get all the future updates on upcoming shows. Also, you can go to TimingResearch.com and download any of the past reports or watch any of the past shows there. Be sure to join us next week. Doc Severson is going to be on. He has been on in a while, so it'll be good to have him back. Also, Andrew Keene and Matt Buckley will be hosting. So I just want to thank everyone from this week again. Barry Burns of TopDogTrading.com, Glenn Thompson of PacificTradingAcademy.com, Lance Ippolito of AlphaShark.com, Kurt Capra of T3Live.com, and Dave Landry of DaveLandry.com.
Thank you.
Everyone.
Thank you.
Thank you.